Hello, and thanks for joining us on this podcast. During this podcast, you'll be listening in on a conversation between Rick Payne and Brandon Poe. Rick Payne was a co-founder of Results Accountant Systems, also known as RAS, the co-creator of the Accountants Boot Camp, a well-known thought leader in the industry, and is the active founder of Principa. Principa provides accountants with tools and resources to help them build a better business and a better life. Brandon Poe is the founder of Poe Group Advisors, a leading-edge practice brokerage firm, and has recently authored the book called The Accountant's Flight Plan, which talks to firm owners on how to make more with less effort while improving the value of their practice.
Today I'm talking with Brandon Poe of Poe Group Advisors, an accounting practice brokerage firm. I recently met Brandon and immediately realized how closely our business philosophies were aligned, which came into really sharp focus when I read his book called The Accountant's Flight Plan, Best Practices for Today's Firms. It's the coolest little book that I've read for a long time, and it's been recently published by the AICPA as an ebook. Of all the business brokers I've met, Brandon's is truly a standout in that his focus is not simply on the purchase or sale transaction. Instead, he helps his clients develop a business plan around their life goals and then assists them in its execution, a part of which is going to be the process of buying or selling a practice. He and his team have helped literally hundreds of accountants transition into and out of practice ownership over many years. Brandon, I have a couple of questions that I'd like to ask you that I'm sure our listeners would be very interested in. So let me kick off with the first one. If I'm a practice owner, why would I want to use an intermediary such as yourself? Why not just do it on my own? Wouldn't it be easy for me just to let people know that I want to sell the practice, go down the road, talk to another CPA firm and say, look, my practice is on the market? Why would I want to use an intermediary?
Well, that's a good question, Rick. It's actually a question that I asked before I went into the brokerage business because I couldn't quite put my finger on why that would be helpful. Exactly. But it really kind of comes down to numbers. If you reach out and try to sell on your own, you will find a handful of buyers. I mean, you can put an ad in a trade journal and get some interest, but you really can't compete with the cumulative effect of our marketing efforts. We are in all of the trade journals on a regular basis. We do a tremendous amount of marketing to the profession. And, we're constantly registering new buyers. So it becomes an issue of numbers. And what we find is that really the most important thing for most people who are selling is to find a good buyer, to leave their clients and their staff with someone who's going to take good care of what they've built. And the best way to make sure that happens is to get a large pool of buyers, and that's also what helps you get the best price. So we feel like we add tremendous value, not only financially, but we help you find the right person to buy the practice.
Yeah, that makes sense. And Brandon, do you also help your clients determine what the right price is for their practice? I mean, would it be fair to say that oftentimes they don't realize just how much their practice could be worth if it's presented more effectively, and that perhaps they're leaving a fair chunk of change on the table?
Well, I think that's true. I mean, you can get rules of thumb. There's a lot of rules of thumb in the industry for pricing, such as 1x gross annual fees. But what you have to also look at is the terms, and you can't really separate the understanding of what your practice is worth without understanding the terms. Oftentimes we see that people who sell on their own, they get weak terms, and they have transactions that are based on client retention rates going forward. And we feel like client retention is really a function of, it's really the buyer's responsibility to properly service the clients, and that's really ultimately what determines the client retention rates.
Yeah, very interesting. And I suppose it's one of the reasons why footballers and all sporting people have agents negotiating for them and helping them with their negotiations.
Yeah, That's a good point. But we do help with pricing. We've broken their process down. I have developed a process that I call the seamless succession, and it's a 5-step process. And if you'll just kind of let me kind of run through those steps very quickly, we want to make this process as simple as possible because people have a business to run. When they go to sell their business, they need to focus on keeping that business operating well so that you maintain the value of it. You don't want to take your eye off the ball. Step 1 of our process is just exploring, and we begin with a focus of the big picture. We want to understand the practice owner's goals and key elements of the practice. We talk about desired timing for a sale. Timing is a very important part of what we do. We want to understand the strengths of the business and just the vision of a successful transfer. So that's the first step, is really just kind of bring some clarity around your goals and identify the marketable elements of the practice. Step 2, as you mentioned, is pricing. We help set a price that's based on 6 critical market-based factors. And as I mentioned, payment terms are really crucial when you're considering value. So our pricing recommendations assume that the seller gets the maximum cash at closing and the buyer takes responsibility for client retention. The third step of our process is marketing, and this is really where we help bring in numerous buyers for every practice that we sell. And as I said, it's the cumulative effect of years of marketing to the accounting profession, and we've developed a time-tested system of identifying suitable candidates for the practice. So we only introduce qualified buyers who are financially and professionally capable of buying the practice. And then the next step is negotiating, and just real briefly, a nice thing about using an intermediary such as myself is you don't have to do the negotiating on your own. We lead the process by having all offers flow through us, which creates a well-paced and a very deliberate negotiation. So, and often we're negotiating with multiple buyers at once, and we also have financing sources so we can help those buyers get money to maximize the cash at closing. And then finally, we work on the transition, and we help our clients develop a strategic, effective transition plan. And we feel like the right buyer coupled with a good plan assures a brief yet very smooth transfer of clients and staff. And so what we're trying to do with the transition is to clarify the roles and the responsibility of both the buyer and the seller after the closing. Those roles are often misunderstood. In the private sale, I think the seller tends to take on too much of the responsibility for transitioning, and it's really up to the buyer to develop those client and staff relationships shortly after close.
That makes an awful lot of sense, and in fact, you've answered very articulately the second question that I was going to ask you. One thing I did want to also mention, I think, is the terms part of the thing that you were talking about that does seem to be so important. I have a feeling that particularly if a smallish practice was to try and sell the firm on his or her own, that a buyer, particularly an experienced buyer, may well be able to get an advantage over them because of familiarity with the buying process and the types of terms that would tend to favor the buyer more so than the seller. So I would suspect that for a practice that hadn't engaged in too many purchase or sale transactions in the past, it would be very strongly advisable to work through an agent such as yourself.
Well, I would agree with you. I think, and what gives you the confidence to negotiate a good deal is often having more than one buyer. So even if, I have a lot of clients that they've helped their clients buy and sell businesses, so they're familiar with what's required of brokering a deal. But you still can't compete with the fact that we bring so many additional buyers to the table. We don't put up any barriers to buyers signing up with us. We don't charge them any fees. We basically want them to all sign up, and then we'll kind of put them through our process to sort through them so that, they get routed to the correct practices.
Talking about fees, what typically is a fee for you acting as an agent in a sale transaction or purchase transaction?
Our goal is to net the owner more than if they were to sell on their own.
So it's a self-financing transaction that you're looking for?
Correct.
Brandon, talking about the transaction, how long does it typically take to sell an accounting practice?
Our average is about 5 months, and that depends on time of year. Depends on other factors. Location is a big factor. But this, in the fall is typically when most activity takes place because buyers, they want to get in there before tax season to capture that.
So if someone were planning to sell their practice, they should be talking to you early in the new year or around now for next year. What sort of time frame would you be recommending there?
Well, I would typically recommend that people talk with me before they're even, just as they're starting to think about selling. I mean, I talk with a lot of clients 2 and 3 years before they're ready to sell. And that gives us time to really kind of develop a rapport, and also it gets them sort of thinking about retirement if that's what their reason is for exit. Ideally, put your practice on the market right after the busy season, and then that gives us a full marketing season to sell it before the following busy season.
I know in the work I've done with just businesses generally, I've always said to them, you really always ought to be thinking about what is this practice going to be worth when I sell it, even if you're 20 years away from selling it, because one of the whole purposes of going into business is to build one that you can sell at some point of time down the track. And I used to say to my business clients then that if you are contemplating selling a business at some point of time, then you really need to start doing something about it 5 years out and preparing it for sale, because that's how you will maximize its value and how you will be able to get complete control over the process. There's nothing worse than being in a situation where you have to sell a business under duress because of illness or circumstance, and so always giving that consideration is very important.
I agree.
Okay, Brandon, so finally, one of the things that does interest me is how come you came to write the Accountant's Flight Plan, and tell me a little bit about your new book that is being published by the AICPA later in this year.
Well, kind of to tie back with what we were talking about a moment ago with planning ahead of a sale, I think it's really important. If I can talk to someone 5 years before they're ready to sell, I think we can help them, and this is probably where Principa could also help, is just getting a business ready for a sale. And so Accountant's Flight Plan was designed to help people who want to improve their practices. I never really had intended to write a book, but I kept a lot of notes and on the practices that I have sold. I would talk to a practice owner, and just every once in a while you talk to someone and they do something especially well. They have a strength that is remarkable. And I just took notes of that. For example, some people are really good at managing staff. Some people are very good at billing their clients. So I started taking notes of what was working in the marketplace, and that's really what brought the book about. The new book, it's going to be out in November, it's called On Your Own, How to Start Your Own CPA Practice. And it was originally written by Albert Williams in 1990, and the AICPA asked me to update it. I ended up rewriting a good portion of it, and I hope that it'll help people who are new into the profession and thinking of starting their own practice.
That sounds interesting. I look forward to reading that because I really do enjoy your style of writing. It has been interesting talking with you today, and I'm sure everybody on this podcast will have benefited greatly from it. So thank you for your time. Let's keep in touch because, as you said, I think the stuff that we do for clients in Principa is highly complementary with the work that you're doing with your clients. I think each of our client groups could benefit greatly from the the work that we each do. So it's been a pleasure talking with you, and I thank you very much for the opportunity to do so.
Thank you. It's been my pleasure, Rick.
I was speaking today with Brannon Poe of Poe Group Advisors. He can be contacted at 888-246-0974 or by email at bpoe, that's BPOE, at poegroupadvisors.com.
My name is Joanna Guire with Principa, and I'd like to thank you for listening in on this conversation. If you'd like to contact Brannon and his team at Poe Group Advisors, you can email them to info@poegroupadvisors.com. Follow them on Twitter at POE Group Advisor, or get more information on their website at www.poegroupadvisors.com. And if you'd like to contact Principa in relation to the tools and resources we offer our members, feel free to email us to info@principa.net. Find us on Facebook or follow us on Twitter at CPA_CA_advisor. And don't forget to visit our website at www.principa.net for more detailed information.